Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to discuss gap fill trades. In my course at LazyGapTrader.com, I teach two strategies, morning gap trades and gap fill trades. And right now, since we're at the tail end of earnings season, the morning gap trades tend to slow down a little bit, but that's why I have two strategies that I teach in my course. The second strategy is the gap fill trades, and you can find gap fill trades each and every day in the market, no matter what the market's doing, no matter what the news is, no matter whether it's slow or whether it's a volatile market, you can always find gap fill trades. Stocks will come back to fill gaps left from the day before, and they will come back to fill gaps left from a year ago, 6 months ago, last month, all over the place. So my goal each and every day is to find anywhere from 3 to 5 stocks that are coming back to fill gaps. So in this video, I'm going to show you real quickly 3 stocks I identified today. Today happens to be Thursday, March 3rd, 2016. The first stock we're going to look at is Disney. I like to start with the 60-minute chart. This is precisely how I teach in my course. Everything you're going to see here is what I teach in my course, only it's a snippet. I go into a lot more detail on how to find the stocks, which stocks this works the best with, and how to trade them accordingly in terms of the gap fill trades and or the morning gap trades. But here, let me just show you the 3 stocks I identified and traded today for gap fill trades. The first one is Disney. So I find the opening gap on the 60-minute chart, and you can see it in this area here. And you see how this tail of the candle, the first candle of the day, the first 60-minute candle of the day, came back to fill the gap. And this purple line at 97.06 was the actual gap level. So let's go down to a 10-minute time frame and see what happened. In the first 10 minutes of the day, the first 10-minute candle of the day, the stock hit a low of 96.89. Now that's only 17 cents below our buy level from where the gap existed, well within the risk parameters that I outlined in the course. And as you can see, the stock immediately reversed and went higher. And in this particular case, you could have gotten a maximum gain thus far, and the stock is still trading, the market's still open, but you could have gotten a maximum gain just in about 30 or 40 minutes of $1.30 on the stock off of the $97.06 gap fill level. This is a phenomenal strategy. It's a license to print money each and every day if you understand how to trade the gaps properly. Let's go ahead and look at the next gap fill trade from earlier today. This stock is Air Products and Chemical Company, APD is the symbol. Again, we'll start with the 60-minute chart. The gap I've identified is $134.18, right in this area here. So let's drill down and look at the 10-minute chart to see what happened. The purple line represents 134.18. And as you can see, the stock opened higher, which is the gap left happens to be from yesterday, came back in the second 10-minute candle of the day to fill that gap, making a low of 134.01, only 17 cents below the level we entered the trade. And as you can see, the stock rocketed higher after that and making a high or a maximum gain thus far today of $1.77 max gain. So as you can see, once the stock filled its gap, the itch, if you will, was satisfied, and the stock reversed, had a price reaction, I like to call it, off of that level, and the stock traded higher, giving us a nice gain. And in my course, I teach how to trade these. I teach whether you want to take a quick scalp trade. I teach how to maximize the gain. I teach how to trail stops along the way. I teach a lot of these different strategies in the course. I just want you to understand where the opportunity lies, and if you understand that there is an opportunity, then you come over to LazyGapTrader.com and sign up for the course, take the course, and you can do this for yourself each and every day. The third stock we're going to look at today is Starbucks. Here again is the 60-minute chart, and the purple line running across the chart is a gap I've identified off the 60-minute chart at $58.38. This was left open from a few days prior, and as you can see today, the stock came back to fill that gap. So let's drill down and go to the 10-minute chart. and you can see the stock came back to fill the gap, traded lower by a little bit, making a low of $58.20. Again, this one pierced through the level by about 18 cents before reversing, so we were well within our risk parameters, and then the stock traded higher. This one didn't give us quite the gain the other two did, making a high thus far today of $58.70, which represents about a 32-cent gain. Now, that's not a tremendous gain, but it's a nice scalp trade nonetheless. It's a positive trade nonetheless. And when you have 3 trades and 2 of them are for well over $1 gain and one's for over 30-cent gain, you can see how that money, that profit adds up very, very quickly, especially when you find these trades each and every day. I look for 3 to 5 gap fill trades every single day. That's exactly what I teach in my course. Come over to lazygaptrader.com. Come take the course. It's a phenomenal day trading strategy where you can compile and compound your profits each and every day in the market. Learn how to do it for yourself. Profit for life. I'm David Frost. Thanks for tuning in for another episode from the Lazy Gap Trader series.